Good afternoon, everyone. My name is Timothy Lee, and I'm a mining analyst here at Red Cloud Securities. We welcome Kerem Usenmez, President and CEO of Metallum Resources. He will speak to us about Metallum's high-grade zinc development project near Lake Superior in Ontario. Kerem, you have 15 minutes, and then we'll have a 5-minute Q&A at the end of the session. Attendees, please feel free to ask questions using the Q&A link below. Take it away.
Thank you, Tim. Thank you for the opportunity. Yeah, so I'm the current president and CEO of Metallum Resources. It's relatively a new company. I'm a geological engineer with more than 20 years of experience in the sector, in all stages of exploration, mine development, as well as production. But we also have a very highly experienced board and a team that can build the mine, grow it, and bring tangible shareholder value as we did before. But this cover slide shows some of the infrastructure we have on our flagship project, Superior Lake project. Not many development projects have that kind of infrastructure. You see tailings dam, polishing pond, and settlement pond, as well as operational water treatment plant here. Having this kind of, the roads and all this infrastructure gives us the advantage of not having huge capital costs and also having the shorter timeline to production. This is a past producing mine, which was closed at the end of the 90s after 10 years of production. They closed it due to low zinc prices at the time. It was around $800 per pound. Today, it's more than $4,000. So a little bit of a difference since then. So now that the zinc prices are high, we're actually looking at reopening the mine in a relatively short period of time. There will be some forward-looking statements, so I urge everyone to read the cautionary notes. But yeah, so our project is at development stage of Lassonde Curve. Like I mentioned, we acquired this asset from Superior Lake Resources, an Australian-listed company, last year. They wanted a Canadian team to build the mine, and with COVID and everything else, it was getting more difficult to run it from Australia. So the deal was made in 2022, and we closed the deal last year, 2021, April, almost a year ago, and started trading as Metallum Resources. But when that happened, when we started trading, they became 65% owners of Metallum because the deal was done with equity. So they own 65%. Sprott and us, including myself, the management owns 15%. So it's 80% of the shares of 195 million shares outstanding. 80% are tightly held. So it's 20% is on float, really. So we're not seeing that much of a trade because of that, partly because of that. Our current market cap is around 17 million Canadian dollars. But what's interesting is it's one of the highest grade zinc development projects in North America. It's in the world. The 43-101 resource we published last year, January, is 2.35 million tons at 18% zinc, 1% copper, and some precious metals. It's everybody likes gold, so I converted it into gold equivalent resource at $1.5 per pound zinc, so a little bit conservative compared to today's numbers. It's correlates, so if it was a gold mine, it would have been 13 grams per ton at 1 million ounces. So it's very high grade any way you look at it. So the Australian company, previous owners, did a feasibility study under Australian standards. We updated that feasibility study to Canadian standards, 43-101, and published in October. So based on that, it has really, really good, attractive, robust economics and shows how attractive this project really is. It's, in fact, one of the lowest cost quartile zinc producers, basically driven by the exceptional, high-grade ore. As I outlined that, it is the highest grade zinc development project out there right now. But based on the feasibility study, all-in sustaining cost, basically the break-even cost, is 41 cents US dollars. So 41 cents compared to 1.85 today, we have a lot of room to, that we will be shielded. Obviously, the low initial capital costs, apart from the operating costs being low, the initial costs are really, really low because of all the infrastructure that I outlined. And I will show in the next slide what else we have on the property that will not only provide us with low capital requirement, but also very short timeline to production, as we're not going to build anything major that we don't need to. But what it also outlines is exceptional EBITDA numbers. So year after year, so there's 9-year mine life. Over the life of mine, it will generate, with today's numbers, almost $120 million Canadian annual average EBITDA. That's incredible, given the size. And but the NPV, the net present value, at 8% discount before taxes, $480 million, and IRR is almost 50% with today's 50%. It's crazy. Well, the zinc market is at all-time lows in the stock, in the inventory, and there's no new production coming in life around the world. I'll show you that in the next slide. So out of 117 zinc development projects out there, most of them are in high-risk jurisdictions. So only 62. So we eliminate those 62 we looked at that are in relatively, in the Fraser Institute's safe jurisdictions. We looked at the zinc equivalent grade. Zinc usually comes polymetallic. So you look at the zinc equivalence grade 10%, there's 31. And then only the good ones, the zinc grade, that is over 7%. And then we looked at the volume, 400,000 tons of zinc. There's only 5 assets that fit the criteria. And 4 out of those 5 are held by multi-billion-dollar companies. Only Metallum is in the million and the low millions. I converted the numbers in the second line here, or the first line, into US dollars just to make it more comparable. So it is very low given the asset value. So in fact, it should be 4 to 10 times. Actually, there was an analyst report that came out, independent analyst report from Fundamental Research last week, outlined that all this, advantages and whatever the disadvantages were, but the value they are targeting is 31 cents. We're trading around 8.5 today. So, but what's also interesting is not just the value that should go up from here, is the grade. Out of all these good assets and under good companies, ours has the highest grade, lowest capital requirements, and lowest market cap. So that alone shows the opportunity here, not only on the investment side, but shows the shortage of good quality zinc development projects that are coming into play, as opposed to the inventories that are depleting around the world, and the demand is increasing. So the 43-101 feasibility study metrics is based on 1,000 tons per day production on the mining side of things. They'll provide us with more than 33,000 tons per year zinc and 1,300 tons per year copper. But as I mentioned, it's a very low cost operation. The cash cost, the operating costs are 35 cents per pound. Again, today it's 1.85. Huge room, so very profitable. So initial CapEx is outlined as being $116 million in the feasibility study. I have to note that the feasibility study under 43-101 dictates that all the equipment needs to be purchased brand new. So that number assumes we will buy everything brand new. We will be, however, we will be looking at leasing to save, because the life mine is not that long initially. Obviously, there is a lot of exploration potential to increase that, but initially we might be leasing or buying used equipment to even cut this low CapEx number even further down. The payback currently sits at 3 years based on the feasibility study again, but we have very creative ways that we are planning to start production, which will cut down to less than 2 years, in fact, by half. How are we going to do that? So we are currently applying for dewatering permits, so we can dewater the underground workings that are already there, that I mentioned, 16 kilometers of underground workings right to the ore. But what does that mean? So we are applying for advanced exploration under the dewatering. That will grant us go underground. What does that mean? We need either a decline or rehab the shaft to go underground. That will significantly cut down our access to ore from 3 years to 1.5 years. In fact, less than 1.5 years if we can start dewatering this summer, which we are on schedule for that, by the way. But that kind of ways, after that, once we apply for full commercial production, we'll get there right away. As soon as we have it, we can start producing. In the meantime, we can also build the mill and some other construction on the patented land we have, which we don't need a lot of work to do. The permitting is easy. First Nations are supported. So a lot of positives, a lot of potential, a lot of minor work really need to be done before we can start producing in one of the best jurisdictions, in one of the highest grade zinc projects in the world, at the best possible time. I mean, we're almost at the level where zinc price was at 2006, all-time highs. We're heading there this week alone. So also after tax IRR is 44%. It is incredible. The after tax and PV 8% discount is over $350 million. It's incredible. The metrics are there. It's small, but the metrics are there. So I wanted to show here the infrastructure. Apart from dams, there's the power. Literally grid lines go across the property. Not a lot of projects have that luxury, to be honest. But there's also transformer on site. It's 20 kilometers away from main Trans-Canada Highway. There's a mine gate. That mine gate is 150 kilometers with that highway from Thunder Bay Port. And there's a railway station, which they historically used to ship the concentrate. That railway station is in a town called Schreiber, which is 27 kilometers from the mine gate. Couldn't have been better. And then the area has also, the mine has under 16 kilometers of underground development right to the ore body, which I'm going to show you. So I wanted to show here where it is located. This is Thunder Bay, just east of Thunder Bay, along Trans-Canada Highway. This will give us access to multiple access to smelters by either rail or highway driving. That will also give us access to port in Thunder Bay or in Vancouver for Asia, or from Thunder Bay to Europe, if we didn't want to work with these smelters in Canada, which, I mean, it makes sense, obviously, to use Valleyfield. It's the closest one. Obviously, it's going to come down to the numbers. But what's interesting is those smelters, the traders are already interested in our concentrate because it's clean. It's free from deleterious materials. No penalties are expected in that sense because it's clean. They like that to blend with the other concentrate they have. So it's very desirable. They already approached us. We're in the early stages of conversations. They're going through some of the data. We're hoping to take that conversation into the next level within this year, later this year. So it's very compelling numbers. So what kind of permits we have? We have a bunch of permits in place. Obviously, the exploration permits, sewage works, and lakes and rivers. What we are in the process of, actually, just before this call, I got the approval for our mining lease conversion. So half of the property has mining patents, which is similar to what you have in the United States. It's basically you're kind of like you're owning it. But Ontario doesn't grant those anymore. They do grant mining lease. So we had applied last year to convert our PIC claims into mining lease. So we got the approval. It's not officially approved. It's just, the paperwork is still being processed, but it is approved. We satisfied all the requirements, just got the email. So that's done. And the next is the dewatering permit. So we are applying for the dewatering permit under advanced exploration. What does that mean? That means that it's a package of bunch of permits together. We've done all the work, the fish count and all the air noise, PEA and all that stuff has been done. we are going to submit it to the, it's at the submission process right now. It's being under review by the ministry. The next steps will be the consultation, which involves the First Nations. So far, they've been super supportive. I, in fact, was talking to them yesterday as well. We periodically talk, and they're very supportive. They want this to develop. We are not disturbing the ground any. It's going to be an underground mine. The infrastructure is already there. All we need to do is put the camp and the mill. The rest is already there. So that makes it easier to fully permit. And having done all this work for the dewatering permit under advanced exploration will expedite the full commercial production permit, because all the work has been done. We just have to update the financial assurance under the closure plan that is already being submitted for the dewatering, the advanced exploration permit. So very exciting times, very creative ways, and having the support from First Nations and local communities, having this underground and having all this infrastructure in place, not planning to disturb the ground or any water related surface stuff, makes permitting a lot easier and faster. It's incredible. So ESG, everybody's talking about ESG. I mean, ESG has always been part of mining. We just never measured it before. But we are focused on that. So far, like I said, our relationship with First Nation is based on us bringing opportunities to them. So we're working with them so far exclusively with their affiliated companies. And on the environmental side, it's the being in our area, electricity coming predominantly 96, in fact, % of it coming from non-carbon emitting sources that will provide us a good advantage if we wanted to go down the route to purchase carbon credits rather than doing the work, which we are planning to do. The camp will be powered by solar panels, and we might do other things. But yeah, I want to touch quickly on the exploration upside potential. Hugely underexplored. We see a lot of potential, immediate plans to drill those dash targets. The solid colors are the remaining ore. The dash color in the top section alone will provide us with 2 to 3 year extension on the mine life. We will do that as we are building the mine. So our initial focus is reopen the mine. I can talk about this more. I see we're running out of time. What to expect? We're starting to raise money to finish the work and start dewatering this summer. This will get us all the work we need. We are on schedule so far to get into production by next year. That is the exciting stuff. So just to recap, one of the highest grade zinc projects out there globally, definitely in North America, lowest operational cost and capital requirements, very clean, highly desirable concentrate with a good upside exploration potential to increase the mine life 2 to 3 years in the immediate term, even further as we go underground. There's a lot more potential at depth with the high grade, but major valuation discount compared to good other projects, the peers and the metrics. So the board and the advisory team, we've done this before. Mark built a zinc company, Trevally, before, excess 1.5 billion, reopened mines in Canada, in Peru, and acquired zinc mines, one of the top 10 zinc producers in the world. He built it. Simon built Fortuna or any other deposits that he discovered, and David also built mines in Africa, but Andrew is our local geologist in Thunder Bay. So I'm always available, happy to answer any questions and make comments.
Great. Thank you for the great presentation, Kerem. We do have a couple of questions here. First, is the Winston Lake head frame still operational?
No, actually, that's a good question. The head frame is not there. They decommissioned the head frame and the mill. So there is no building there, basically. It's capped. We need to remove that cap and put for this advanced exploration for this year, probably a portable head frame to go underground and do the necessary work for this year. but we will have to do a permanent if that's what we are going to go down the road to get access for.